You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again for a little bit of TWIFO This Week in Futures Options, the program where we break down everything going on the futures options side of the fence. But what's going to make it onto the show? You got to tune in every week to find out. My name, of course, Mark Longo from the THEOptionsInsider.com, reminding you three things at the top of the show. A, if you like what you hear, make sure you're subscribed to the full network. A lot more than TWIFO going on over there. Nearly a dozen shows coming at you pretty much throughout the week. B, if you like these shows, throw a star, a comment, a rating, whatever your platform lets you do. Every platform is different. It does help new people continue to discover not just TWIFO, but the entire network. And then C, if you think you're ready to take your listening and indeed your trading up to 11, only one place to go, theoptionsinsider.com/pro. That will get you access to our exclusive pro podcast feed, which has 2 exclusive shows coming at you every week, 250 plus episodes waiting for you there. The second you hit that button, pro Q&A sessions with some of the best minds in the world of options and derivatives, as well as, of course, awesome options oddities programs, and just about everything else under the sun out there, listeners. So check it out, theoptionsinsider.com/pro, the place to go to learn more. As we go to learn who's joining us in the old CME Group hot seat today, I am pleased to welcome back via the magical technology known as telephone, our old friend, Mr. Dan Gramza from Gramza Capital Management. Mr. Dan, welcome back to the show. What's going on? Did you not pay your internet bill today, sir?
I think must be the issue. I'm having a little trouble there with signing in, but, having a backup, that's always the key, whether it's your data for your platform or, in this case, communications. But I got to check out those bills to make sure they are paid.
All right, glad we could have you on as we keep on rolling right on into the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everyone, welcome to the Movers and Shakers Report, the portion of the show where we break down everything, lighting it up to the light side and to the dark side over there at CME Group this week. Mr. Dan, you know the deal by now, sir. Where should we begin this week, to the light side or to the dark side?
Well, I'd say let's start to the light side.
All right, a good choice this week with a lot of green on the screen. You, of course, listeners, can see these reports for yourselves if you follow us at Options on Twitter or at CME Group on Twitter. We both put them out right before showtime. And yeah, an embarrassment of upside riches thanks to our friends Powell and Company out there this week. I'd say 75-25 green over red this week. There's enough green, or I should say enough red to do probably a bottom 10, maybe a bottom 15, but not much beyond that. The rest is all green all the time, listeners. So to the light side we go. Number 5, getting back into these sectors that are just all the rage with the kids these days, listeners. In particular, is the communication sector kicking us off at number 5, up 4.73%. It was number 2 to the dark side last week, off 6.4%. So again, shows you what a difference a week makes. And also, if you're intrigued, what is really driving this action we're seeing in the major indices like the S&P 500, the Nasdaq, it's a good thing to start paying attention to some of these sectors. These might help you break that down a little bit more. Number 4, back to the Nikkei. It's up 5.33% this week, so getting a little international flavor in our equities. Number 3, back to domestic equities. It's the old E-mini Nasdaq 100, up 5, almost 5.5%. My goodness, they are loving this post-Powell market out here. Number 2, still hanging in the equities. A lot of equities this week, listeners. It's the tech sector of the S&P 500, up 5.84%. And if that's not enough, so we have effectively an entire equity-dominated top 5, listeners. Number 1, it is the consumer discretionary sector, up 6.19%. You know the deal with these sector futures, still kind of a newer addition, growing in volume, not quite on the optionable front yet, but it'll be interesting when they are. Certainly a lot of interesting paper to be done looking at trading the big index versus the sector, so a little bit of some dispersion action may be going on there. A lot of fun opportunities once they do indeed become optionable. All right, to the dark side we go, listeners. Number 5, it is Palladium, off 2.43%. Number 3 in the other direction last week, up 2.46%. So it just giving back exactly what it made last week, pretty much exactly. Number 4, we're going from metals to energy. It's Brent, off 2.73%. Number 3, now we're off to the ags. Quite the assortment on the dark side this week. It's off to the ags, in particular, rough rice, off 2.82%. Number 2, we're staying in the ags. It is soybean oil, off 3.71%. And the number 1 dark side mover this week, it's oats. So pretty much a trifecta of ags at the top of our dark side this week, listeners. Oats off 4.53%. It was number 2 in the other direction last week, up 4.94%. So like Palladium, just pretty much giving up everything it made last week out there. All right, that's our movers and shakers this week, listeners. And given the fact that our light side is entirely dominated by equities, and I know a lot of you have equities on the brain, I think we have to start there first.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the wonderful, the topsy-turvy, what a difference a week makes world of equities, listeners. You know where to find all this fun. Head on over to cmegroup.com/TWIFO, TWIFO, /TWIO, TWIO also should work. That'll get you to this week in futures options report. From there, go to that asset class drop-down, listeners. It's the first one you'll see. It's an alpha order list. You're going to go down 4 slots to equity indexes. Then we're going to head out into U.S. Index E-mini. Maybe we'll mix it up this week. Maybe we'll hit NASDAQ as well, but I'll let Dan choose first. Mr. Dan, sir, what is catching your eye in the ever-tumultuous world of equities this week?
Well, you know, I think a good one to start with is the S&P. Shall we take a peek at that?
I think we could probably make that happen, sir.
It's interesting, excuse me, in terms of follow-through. You know, yesterday we had the shot in the arm from the Fed. You know, the Fed did what the market was expecting, and that is hold interest rates unchanged. And we see that also around. Bank of England said the same thing. Norway said we're not going to do anything with additional controls right now. We're going to leave things unchanged. The thing that does, well, before I say that, first, it's comforting to the market. Because what is at play, I think, in these equities, one of the things is where we are with interest rates. We're at 5.25%, 5.5%. And last time we were here, that was 2007, and we know what happened after that. The market crashed. So there is that sensitivity. You know, what is the magic rate that will cause these markets to fall apart? And there is a number. We don't know it. The Fed doesn't know it. What they do know is they're trying to get to the magic 2%. And, you know, Mark, that's something that I find a little puzzling, I guess I would say, is what's with the 2%? Think about all developed countries' central banks. What are they saying? Look at the ECB and Canada and Australia and Japan, and they're saying, well, when we get inflation to 2%, we're going to be okay. What's disturbing to me is everybody's using it, and why? Can we go through a statistical analysis to show that if you're at 2% inflation, that means your employment situation is as solid as it can be? We have price stability. Everything looks good. Inflation's in control. Where did that number come from? And my concern is this. I like what the Fed did. I like the fact that they're not doing anything this go around, because we want to remember it takes 6 months to 18 months for our economy to feel it. The markets that you and I look at react instantly when the Fed says something or does something, but our economy doesn't. So the concern that I have is, what is the cost to go from a little over 3% inflation to 2% inflation? The Fed has said that's their objective. And they said down the road we could be increasing interest rates. So nothing has changed in terms of their script. That's fine. But to go from around 3% inflation to 2% inflation, how much more of an increase do we need, or do they think we need, in interest rates? And what is that magic number that now we see a market correction? Maybe we see a recession, although all things look really good right now in terms of our economy. And maybe the natural inflation that we should have is 3%, or maybe it's 2.5%. And at that level, everything is copacetic. Is that what we should be looking at? And right now we have this broad global of developing countries looking at 2%. And my concern is, again, the cost to go from 3% inflation to 2%. You know, if you look at the UK, their inflation rate's 6.7%. What is that going to cost them to get down there? And now we could say, I said the S&P 500, and people could say, look, I'm focusing on the United States, and these other countries do their thing. I think it's important for us to remember that 45% of the income for the S&P 500 comes from outside our country, outside the United States. So when you think you don't have international exposure, you do. You know, those large companies, those large cap stocks don't just function in the United States. So what these other countries do, that revenue stream that we're looking for from other countries, you know, becomes an important component. Think about how we look at Caterpillar as an example. Are people buying this heavy-duty equipment because they're building a lot of stuff in other countries? Or is that slowing down? If it's slowing down, then maybe their economy is slowing down. Or maybe we feel it here in this country because we're not going to see as much housing construction. We are seeing housing dampen a bit. We're not seeing prices, but we are seeing it slowing down as these interest rates do go up. So it's an interesting place that we are right now, I think, with these indices. The S&P 500 tomorrow is going to be so important, I think, because what have we seen? We've seen for the last 4 days the S&P 500 has been up, and we see a nice healthy move so far today, trading near its high. That's terrific. It's higher than I expected to see today. But how does it go home over the weekend? Do we close near a new high on Friday, and do we close near that? Can we get back above that 43.80, which is the next major reference that we want to think about, I think, in the S&P? If we close above it and we close near its high, people are saying to us, hey, you know, I believe in this. I'm willing to hold it over the weekend. Is that what we see? Or do we see new highs tomorrow and it crashes? It closes way down. That would imply that it may have gotten high enough to find sellers or buyers saying, I think I'll take profits over the weekend. Maybe I'll get back in on Monday. So I think the next few sessions, especially tomorrow, can kind of give us a barometer to think about how the market's digesting all this news that has come out. And, you know, after the close, we have Apple talking about what's happening with them, and that could set the tone. And, you know, Mark, here's what's interesting that you and I and the listeners can do with that. All right, Apple comes out after the close. Well, we can follow how the market absorbs it because we can look at these futures, and these futures trade 23 hours a day. And so we can see, where I look at it is, we can see how Asia, which starts 5 o'clock Chicago time, today, how does it respond? Do we see the S&P or the Nasdaq, in this case especially, getting stronger? Does Asia session absorb it in a positive way? And then around 1 or 2 o'clock in the morning, depending on the time zone, we see Europe kicking in. So I go to bed watching what Asia does in terms of absorbing what happened today, and I wake up to see what Europe is bringing to me. So do we maintain this momentum overnight? And I think the futures allows us to do that. And, you know, these doggone options on futures, they trade just like the futures do. So you have that round-the-clock ability to manage a position and to monitor how the market's absorbing information. So it's an interesting setup I think we have right now.
Very interesting setup indeed as we look out here to the explosion of paper. It is a Fed week, listeners. You expect the E-mini S&P to be lighting it up, and that is the case. Closing in on 5 million contracts, 4.83 million contracts right now. So it's almost impossible to parse that amount of paper, listeners, with any sort of accuracy or intelligence. That said, once we start filtering out the noise, and there is a lot of noise, yet again this week, the biggest trade, 90,000 of the 34 quarter puts expiring tomorrow, 50,000 of the 35 half puts expiring in 4 days. This picking up the nickels persists, listeners, for hundreds of thousands. I'm sure if you add it all up, because this goes out many, many cycles. It's not just the front couple of days that we're seeing these puts go up. 32 half puts going up, expiring in 14 days. There's just size for days out here. So if you maybe I have to make a filter to filter all that stuff out to get to some of the meat out here, because the first, dare I say it, meaty size trade that we're keeping an eye on out here are the 42 half puts going the way of the dodo today, listeners, in a few minutes. And these have traded about 31,000 contracts this week, 25,000 of that going up today, 5,800 going up yesterday. Obviously, today's paper is opening. Only 2,400 were open coming into today. So size action on the 42 half strike out there in the S&P. Not a surprise given that we have now blown firmly through that. Just a couple of sessions ago, listen, it seems like we were threatening 4,100 in the dark side direction. Here we are now blowing not just through 4,200 since then, not just through 42.5, but all the way north of 4,300 today. Listeners, the S&P up nearly 1.8% coming into showtime. So they are really loving what Powell had to say out there. So these puts obviously opening for size on the 42 half strike out there. If you get a little bit beyond that, you go to the 42 quarter puts, 22,000 of those going up this week. Those are also expiring in a few minutes. 18,000 of those today. So interesting strikes given the fact that 42 half, 42 quarter now very much in the rear view mirror, that those would be lighting it up today. And opening paper nonetheless. So that is kind of interesting. Folks are opening over 50 handles away from where we're trading right now with a few minutes to go. So it gives me the sense that maybe a little bit of the old picking up the nickels is not limited to the 34 quarter strike, maybe some other stuff afoot out there as well. That said, if we scroll down a little bit farther, listeners, and dare I say it, we go out a little bit farther as well, there is some paper going up for size on some, dare I say it, relevant strikes, including, surprisingly enough, you have to go all the way out to D's expiration, listeners, so a whopping 42 days from now. Oh, my goodness. But one of the larger, dare I say it, relevant prints going up this week are the 4,000 puts, trading pretty actively, 27, nearly 28,000 times this week. Now, this one makes a heck of a lot of sense to me because, like I said, not that long ago, we were threatening to break 4,100 to the dark side. And then after that, next stop, of course, 4,000. After that, if we did break through it, who knew where the next stop was going to be? So not exactly surprising that the 4,000 strike would be lighting it up in D's. What is surprising that of the about 28,000 of these that have traded today, so again, more than some of those other garbage puts that we were just talking about, the lion's share actually trading today, 17,000 going up today, 3,000, about 4,000 on Monday, slightly opening there, 3,000 on Tuesday, 4,000 on Wednesday, and then again about 17,000 today. So opening earlier in the week, again, as we're a little bit closer to that strike, makes some sense that maybe some folks getting the heck out of Dodge as we are retreating now with the lion's share going up today. Again, there were 30,000 open coming into this morning session, so the 17,000 today could be folks bailing. What do you think, listeners? D's 4,000 puts, you think folks are getting the heck out of Dodge? Are they abandoning that, saying, yeah, you know what, post-Powell, we're not going to break that? Or are they perhaps doubling down, diving on in while they're a little bit cheaper to get some of that action? I don't know. Intriguing stuff. D's expiration. The D cycle, always an interesting one. You've got some seasonality kicking in. Market's a little bit thinner towards the end of the session there as well. So that can make things a little bit interesting. Speaking of interesting, Dan, really quickly, I do want to dip our toes out here into the tech-heavy Nasdaq as well, because A, we don't talk about it that often here on the show, and then B, because it is lighting up our light side movers this week. It is number 3, up almost 5.5% out there this week, listeners. Now, one of the reasons the E-mini Nasdaq doesn't come on our radar more than, let's say, the E-mini S&P is because there's a little bit of a volume difference. S&P closing in on 4.8 million. Right now, the E-mini Nasdaq doing 137,000. So respectable paper by any measure, but again, it's not blowing the doors off of the E-mini S&P 500 or 3-month SOFR or any of these other crazy contracts that are going up for many, many millions of contracts. Dan, you spend a lot of time watching the Nasdaq, and if so, what, if anything, is catching your eye out there these days, sir?
Well, I have to tell you, the last 2 days is what's really been impressive with the Nasdaq. Excuse me. Yesterday, after Powell, the market really did respond. We saw those companies take off, and we want to remember that the Nasdaq is a capitalization-weighted index, so the tech stocks, which comprise about 48% of this index, really took off, and they really responded, and we're seeing it again today. They're very clean from what I look at from a technical point of view. Today we opened at the low, which means we opened in Asia. Asia put the low in for today's action in the Nasdaq. And right now we're not finished with the session, but we're trading basically right at the high. So we're seeing a level of confidence, I think, coming in from the market. We saw it yesterday with that close. It was strong through that Asia-European session. And right now, it's still holding its own. Again, how do we finish here? I think what's going to be important for tomorrow on Friday is, do we see that continuing? Do we see this confidence from these buyers continuing? So what would be a measure of that tomorrow? And I would say if we can get a close above that 15,140 to 150, not a long, huge. And if we have long distance from where we are now, if we have the same kind of day today we do tomorrow, which I don't expect, but, you know, we got more employment numbers coming out here. We have another thing out there that creates a belief system, and that's what fundamentals do, I believe. They create beliefs that people have about a market, and we see it expressed when they make trades. And so are we going to see that information coming out that says, oh, gosh, things are okay, things are still stable, we can handle interest rates where they are, and if they stay here longer, okay, no problem, I want to be a part of this market. So a close above that 15,000, 140, 150, right in that range would say, I'm here and I'm still here going into the weekend. So I think the Nasdaq is really an interesting barometer because of what makes it up, and it's also going to say something about what's going to happen later today with Apple. So I think it's in a very interesting position. It's also going to be interesting to see if we can maintain the momentum that we're seeing here now. And Mark, I can't wait to hear what you have to say about those options, because that really gives us that feel about expectations. What do people believe? And all that information that you share gives us that insight.
I appreciate that, sir. But I'm intrigued as well, because we don't get a chance. We don't get a chance to sink our teeth into Nasdaq too often. Obviously, the narrative for equities these days is all 0 day all the time, but sometimes things can surprise you. Let's see if there's any surprises lurking out here in the Nasdaq this week. As Dan mentioned, we are just north of the 15,000 level, 15,001 as we came into the segment, up 736 and a quarter handles in the S&P, a little over 5, about 5.1% just this week. Of course, you go back to the end of last week's show, we're up about 5.5%. So just a banger week by any perception to the upside out here. Again, almost 150,000 contracts on the tape, right around 140,000 right now on the tape in E-mini Nasdaq land. Now, you might think it's all 0 day all the time, and you're not wrong. 45.6% of the paper is expiring within the next 24 hours. You go out 4 days, and you got pretty much 50%. So that breakdown, percentage-wise, is very similar to what we're seeing in the E-mini S&P. What's interesting, though, is that the largest print out here this week is, again, going back to the D cycle, like we were just talking about with the E-mini S&P. One of the larger prints out there outside of the garbage puts was in the D cycle as well. So even though 25% of the paper right now is expiring on tomorrow's expiration, if you add in the stuff going away in a few minutes in the next 24 hours, again, 45% of the paper going the way of the dodo. But that said, the 13,500 puts in December, so again, an interesting strike as well, leading the volume today with nearly 3,000 contracts this week. The big day was Wednesday, about half of that, about 1,500 going up, so not surprising. Powell driving some paper out there. 600 on Tuesday, 600 also on Monday, opening earlier in the week, and about 300 and change today. So 13,500 puts opening earlier this week and then taking some off. Coming into today's session, we still had about 1,200 contracts open on this strike. So even after folks bailed yesterday, there still are a decent number of options open on this strike. Again, we're at a little bit north of 15,000 right now, listeners. So 13,500 by December expiration. Were some folks looking a little bit apocalyptic? Were they thinking maybe Powell was going to drive us lower? We had seen a lot of red on the screen heading into Powell, so you could be forgiven for expecting a little bit more dark side to come. But yeah, 13,500 puts in December. If you had that on your bingo card, you are a more insightful tracker of NASDAQ than I, because I did not think the 13,500 puts would be leading the dance out here this week. Then if we dial it back from there, we get into some of the more expected the usual suspects out here, listeners, including the par puts, but the 14,000 puts going up 2,100 times this week, expiring tomorrow. So again, this is more very near-dated paper. Not so much trading today, but 830 on Wednesday, 700 on Tuesday, about 500 on Monday. Opening earlier in the week, obviously, as we were threatening things earlier in the week, post-Powell, folks getting the heck out of Dodge. Only about 400 left open on this strike, so it doesn't seem like many people are left. It was more of, looks like an early week spec than they got the heck out of Dodge. Hard to blame them. And actually, taking the top spot above those, taking the number 2 spot, I should say, are the 15 quarter calls, 15,250 calls expiring in 8 days. So again, 8 days in eternity. Again, that's why I like checking out some other indexes sometimes, see what else is going on out here, aside from people picking up nickels in front of the steamroller in the S&P. But 15 quarter calls going up 2,255 times this week. Again, expiring in 8 days. 1,600 of that today, 600 on Wednesday, not so much earlier in the week. Worth noting, today's paper all opening yesterday and all opening clearly today as well. Only 600 and change were open coming into today, so yesterday's paper was clearly opening as well. So yeah, a lot of opening on the 15,250 calls, the 15 quarter calls in the Nasdaq listings. You like those in 8 days? Hey, we've been moving a couple of hundred handles at a clip out here, so we could move 250 in a blink of an eye. Certainly by next week we could be there. Do you like these, listeners? 15 quarter calls in Nasdaq? Is that maybe a bit of a bridge too far? Again, Dan kind of mentioned, can we close above the 15,000 level heading into the weekend? I guess that'll be a key level to watch out here. But fascinating stuff. I like breaking down some other indexes. We also have 14 quarter puts going away in 5 days, doing about 1,100 contracts this week. Again, looks like most of that heading into the Fed meeting on Tuesday and then taking them off on Wednesday like we saw on some of the other strikes. So some of the paper you'd expect, but also some interesting surprises out there, which is why we crunch the numbers at the end of the day. All right, Dan, we talked about a lot of equities, filled half the show with equities. Where should we hang our hats next, sir? What product category, what complex is catching your eye?
Gosh, that's a tough one because what we've seen impacts everything, the things that we're talking about. And, just one more thought on the equity side, and that's our friend, Mr. Russell. It's one that we've seen didn't respond much yesterday. But today, it's really taken hold. And we're seeing a fairly strong move in that market. And again, it's going to be an issue. Do we finish this way this week? And can we get a close above 1735? That would be the next reference for it. But it is an interesting index, and it's that small to mid-cap stocks that are responding late when you compare it to the Nasdaq or the S&P 500. So I think that's really an interesting one. The dollar also is weaker across the board when it comes to these currencies. I think is an interesting area. The interest rate markets, the notes and the bonds, they're up in a very strong way because yields are coming down. We could take a look at those markets, or we can talk about gold. Gold, the precious metals are things that are not responding, I think, as people expected. They were looking for closes in gold above 2,000, and we're not really seeing that. We're seeing a market that's kind of catching its breath. I think it's a market that wants to go higher, but we're just not seeing the paper supporting it. Gold's in that boat, and so is silver.
A lot to unpack there, Mr. Dan. You mentioned the Russell really quickly. We were talking about Russell 2000 on our last show and kind of the surprising role it's played, sometimes moving to its beat of its own drummer, sometimes moving in lockstep, doing the latter today. A decent week out here paper-wise. Remember, we talked about the Russell 2000 a lot here on the show, listeners. And a good week for them was about 25,000 contracts, and they're pretty much at that right now, about 24,000 and change. So that's the equivalent of a banger week for the Russell 2000 options, listeners. And you mentioned the 1735 level, Dan. It seems like the rest of the options market agrees with you. Looking here at the paper, the strike du jour, the strike of the week, call it what you will, 17 half calls expiring in 8 days, going up 1,800 times. 17 half calls expiring in 22 days, going up 1,000 times. 17 half calls going away in December, so 43 days, going up 1,700 times. So clearly a lot of paper coalescing around that 17 half strike as well out there, as we're at about a 17-13 in the Russell 2000 as we're kicking off the show here, listeners. So interesting stuff out here in equities. We could probably fill the rest of the show talking some equities here, listeners. But looking at our movers and shakers, we do have some metals out here. Palladium, number 5 on the dark side out there. So I suppose, Mr. Dan, you like yourself some gold. It is a week. A lot of people are talking about safe havens and that type of stuff. So let's head out there to the shiny stuff next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, you know what to do now. Get into that, drop down, pop out of equity indexes, go down 3 more slots to metals, and we're going to hang out in precious. Obviously, palladium lighting it up today, but we all know the deal with palladium. Not exactly a huge option stalwart, so can't really sink our teeth out there. But gold, as Dan alluded to, back below the 2000 level, 1993 and change, when we're kicking off the show, off about 5 handles. Puts it off about 0.25%, so not going to make our movers and shakers on a week like this, but intriguing from a volume perspective as well, 176,000, so a decent week out here for all things gold. Mr. Dan, what is catching your eye out there in the shiny stuff this week?
Well, what's interesting about gold, it's the way we got down here. It's the way it's behaving today. It's very balanced. It's a market kind of, I wouldn't say falling out of bed, but it did break over the last 3 days, actually 4 days. We found sellers as we approached that 2020 level. And that was fairly consistent. We had about 3 times we got near that level, and they smacked it to the downside. Yesterday, after Powell's announcement, it was fairly balanced. And now today we have a weaker dollar. That's something that can motivate gold. You know, I look at the precious metals as what I call an excuse market. It needs an excuse to do something. It's not so much a supply-demand thing. When you talk about base metals like copper, that's a supply-demand can come into that. But gold, it's more perception in terms of what drives this market. High inflation, that can give an excuse. People want that safe haven type investment. And today, with the weaker dollar that we've seen, with Powell's comments that have come out, we really haven't seen this market get ignited to the upside. It's very balanced here around the magic 2,000. What's also interesting to me, Mark, is that when we've gotten below 1990, and let me just check something here, 2, 4, about 6 times over the last week or 2 that we've gone below 1990, they bought it every time. So on a candle chart, you would see those lines on the bottom, the shadows or wicks, which imply, from my point of view, buyers coming into the market, including today. We broke a little lower, and it's a little bouncy. We rose up a little bit, and then it sold off a little bit. So right now, it's very balanced going into this weekend or going into Friday session, and that could imply transition. So if the dollar's weaker tomorrow, do people now start taking a look at gold again? Like I say, I think it's a market that wants to go higher. It just doesn't seem to have that paper support to get us going. And even, the silver market is another barometer that we could look at, but, it's not the same as gold. They're not behaving the same way right now. And I think silver's a little softer. Gold's a little more resilient here. And here's one other thought. So let's say that gold is maybe in a transition to go to the upside. All right, so what are the excuses that will drive gold? And what are the references that you and I could look at to say, yeah, this guy is really moving? Well, it takes us back to that 2020. If indeed it's in transition, and if indeed we have a positive close tomorrow, that means in the next 2 to 3 days, by Wednesday of next week, we would want to see this market closing above 2020. If it does, that implies another leg to the upside. If we kiss 2020 and we spend a couple of days backing off, that could be a longer-term high for that market. So I think the next week or so for our friend, Mr. Gold, could be really insightful for a longer-term point of view on that market. So it's bouncy on the downside below 1990, struggling trying to get above 2,000. And if it does, then that 220, that's going to be the next magic level, I think, for Mr. Gold.
Mr. Gold, what is the magic level for Mr. Gold, listeners? Right now, again, it looks like can't hold on to 2,000. We'll see what's going on later this week. If you're paying attention to gold this week, listeners, I know a lot of you are with all the madness going on in the Fed week. Again, closing in on 200,000 contracts in the gold complex this week. And unlike a lot of the equities and everything else we're talking about, we're going to go a little bit farther out for the frequent offender here, the leading source of paper out here. It is the DEES expiration cycle. 35% of that closing in on 200,000 contracts going up in the DEES cycle. It has about 25 days to go out there. We're going to hang out there. What is the vol? You might be asking again. Gold, never been a bastion for volatility, and once the Fed is over, you're going to see that coming in, and that's pretty much the case right now. About 1240 in DEES gold, off about 2.1 points. So vol coming in out there for all you long vol lovers in gold. Not looking great. Skew-wise, last week the puts were 3.5% cheap and the calls about 6% bid. Interestingly enough, as post-Fed, we're seeing that skew widen out quite a bit. We're seeing the puts now 7.1% cheap and the calls 10.3% bid. So, as is frequently the case with gold, once again, we are back to a scenario where all the love, all the interest is to the upside, listeners. Strong bid for the calls. So if you are intrigued in, let's say, covered calls in gold, or perhaps a nice tight collar, discount on the puts, a little bit of a premium to the calls. Again, you're talking at a lower vol base level to begin with, so these are not earth-shattering numbers, but still, if that's your go-to, you like a good collar in, let's say, a precious metal, then I guess you could do worse than the setup we're seeing here. If we go a little bit farther out, the calls, let's say out to March of next year, the calls, and even April, the calls are about 13, almost 14% bid. So you're getting a little bit more juice out there. But other than that, for a nearer dated contract, you're not bad out here. In terms of leading the dance, it is DEES, the 20 half calls. Interesting strike. So 2,050 calls going up 5,100 times this week, leading the dance this week, listeners. So that's an interesting strike. Kind of pretty active every day. 1,500 on Wednesday, mostly opening there. 1,500 as well on Tuesday, mostly opening there as well. 1,100 on Monday, slightly closing, and then about 1,000 today. Obviously, we don't know today's paper, with about 6,500 still open on this strike. So 20 halves. Was that your guess, listener? It wasn't my guess out here. Interesting stuff here. I would have assumed something maybe closer to that par strike, but that's why we crunch the numbers. And then right behind it, listeners, Dan was just talking about where gold maybe can close this week for support. The 19 half puts were also lighting it up this week, right around 5,000 contracts as well. So it was a pretty close race, almost a tie between the 20 half calls expiring in December and the 19 half puts. So 100-point strangle / risk reversal / collar, call it what you will, out there, listeners. Which of those would you rather have in your back pocket right now, the 20 half calls or the 19 half puts? I think I can guess which way you'd go, but intriguing stuff out here. 5,000, like we said, almost exactly the 19.5 puts going up. The big day for those, actually Tuesday, 2,100 on Tuesday. So these not as active all week long as the 20.5 calls. And then 1,500 on Wednesday. So opening on Tuesday and then closing on Wednesday. And then about 1,200 going up today. Obviously, we don't know about today's paper, but there's about 4,400 open coming into today. So there's a chance it could be closing there as well. Then behind it, we have the 2,100 calls going up 4,300 times. So It's all upside all the time, which again is kind of to be expected with gold, but some of these strikes are not what I expected. The big day for the 2100s also Wednesday, also 1500. So maybe we had a 20-half 2100 vertical going up on Wednesday because they were almost exact same from a volume perspective, and they were both opening as well. Could just be similar paper going up in both strikes as well, but sometimes if it looks like a duck and it quacks like a duck, it might be a duck, listeners. We also saw the 20-halves and the 2100s both trading on Tuesday as well. Almost 1,600 of the 20-halves and about almost 1,400 of the 2100s going up on Tuesday. So symmetrical, similar paper there as well. Slightly closing on the 2100s on Tuesday. Not much to speak of Monday or today. Again, a total of 4,300 of those. If you go a little bit farther out, gold's always good for some longer-term upside. And that is the case. About 2,300 of the March 2175s going up this week. That's not as far out as we are normally used to seeing. How about the D's 2024 3000s? That's what we look for in gold, listeners. Those were going up this week as well. 1,000 times of those. So 500 on Monday and 500 again today. And worth noting, there's about 5,400 contracts open on this strike for the D's 3000s. It's like it might be some vertical action, 2,500, 3,000. If that's the case, it went up 1 by 2 on Monday and a funkier ratio, 350 by 500 today. But either way, looks like 2,500, 3,000 vertical action. Interesting stuff if that is indeed the case. We're already coming up against it, Dan. Only squeezed in a couple of complexes, but there's a lot to talk about in those. We do have some interesting feedback and some polls and other things to get to as well. So let's round it out, a little bit of the old futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everyone, welcome to the Futures Options Feedback. And Dan, I had some questions and some polls I wanted to go over with you, but I always say here on the show, if you're part of the pro and you submit your questions, you always filter to the top of the list. And we had a listener request from one of our pro members, Dan, for a category for the show today. We have Age of Delaquarius writing in saying he can't make the live show today, but he's always interested in Dan's takes on energy, especially nat gas. So never let it be said, listeners, that if you ask for this show, you shall not receive. So in our time remaining here, Dan, we'll see if we can squeeze in a little bit of nat gas analysis by request. Pop into that drop down, listeners. Go up from the metals up to the energy sector. Then we're going to go into product family. Going to go down 3 slots to natural gas. Nat gas looking frothy this week, listeners. Almost 3.5 right now, 348 coming into showtime. So pretty juicy, also pretty active this week. Again, nat gas, if we did a separate movers and shakers for volume, nat gas would certainly be on there. Normally around 400,000 contracts, maybe on a decent week 450. This week, 637,000 contracts. So nat gas putting up some numbers this week. Of that, 56% going up in the D's contract, which is the front month contract. Now, there are no weeklies or dailies out here in nat gas, listeners. So front month is as close as you get, which is probably why 56% of this action-packed week going up in the front month. Mr. Dan, by request, sir, you in particular, they want to know your outlook, your insight for what's going on in nat gas right now, sir.
Well, it's a market that's very kind of them to even ask about my opinion, but it's a market that right now we have kind of mixed results. We have, well, first, let's think about nat gas in terms of how it's used. It's a third of it is used in the United States, I'm talking about, to heat our homes, cook our food. A third is used for industrial supplies. Some companies like steel industry, chemical industry, they use a lot of nat gas. And another third goes into electricity. So when it comes to any weather extremes, demand for natural gas kicks in. Cold weather, warmer weather, where we have to produce more electricity for our air conditioners, all those kind of things come into consumption. Now, the issues that we've seen over the last few days is that we've had weather reports that, it's getting colder, and we expect increase in demand on nat gas. We saw that a couple days ago. What's interesting is yesterday and today, we don't see that follow through because some of the things came out and said, weather's not too bad. So let's put that aside for a minute and think about where nat gas fits in globally. And it is a global market. And a few years ago, Mark, if you and I were talking about this, it was a domestic market. But when the doors opened that we could export, and we have now built export facilities, and Europe now has the ability to import nat gas, and even Germany's doing some things offshore, because before they never had import facilities in Germany. We're seeing some changes. We're seeing some feedback coming out of Europe that Norway is doing their thing. They supply about 20% of natural gas to Europe, and the storage facilities look okay. They look like they have enough to go through the winter. It's a different situation than we had a few years ago with Russia and Ukraine having a huge impact on that. We're also seeing a redistribution of natural gas globally. Russia and China, for example, they already have a pipeline. They're building new pipelines. We're seeing new pipelines being built in Europe, which we hadn't seen in a long time. So things are changing globally when it comes to this marketplace. So when we think about natural gas, I think it's important that we think about the global perspective and then also what's happening here domestically. And we've seen some numbers where inventories have been a little tighter on nat gas, and that's one of the reasons why we broke earlier today and then we bounced up. So here's what's been interesting. Let's talk about the last 4 days in this market, or 5 days. Every time we got below 350, we found buyers. It's bounced up every time, including today. So that tells us something about people responding to nat gas. Is that hedging? When you see something that at a level we see what I call consistent behavior, oftentimes that's because of hedging. People come by, they expect long-term prices to go up. They buy the break. Every time it comes back, in this case, below 350, they say mine at, below 350. It's part of what we're seeing. I think the challenges for this coming week is this follow-through issue that we've been talking about. If buyers are really here, and if there is this idea of this pent-up demand because of potential supply issues, that means by next week at this time, by Thursday of next week, we should be closing above 370. And here's the thing to keep in mind. If we trade above 363, my feeling is that session you want to close above 370. And the reason is they have sold 363 before. So now if we trade through that, the people who sold 363 would be underwater. Therefore, you expect them to buy it back. And that buying order flow can add a little push, and that push should be a strong close. So that 370, I think, is a next important level that we want to pay attention to in nat gas. And if we're going to see this strength, then we'd want to see that next week. And if we do, then we may have the potential for a stronger up move in this market. Nat gas is still relatively cheap, especially when you look at it on a global basis. So the expectations, it's kind of like the gold. expectations are that market's going to get stronger. I think expectations for nat gas is that this market's going to get stronger, especially as we go into winter. But we do want to remember that it's not the same situation that we had before with the Russia-Ukraine situation. So we could have that move, and I think that is the expectation, but I think we need to keep it in perspective in that regard. So interesting market when it comes to nat gas, and I want to thank the listener for asking about it.
All right, that music means we are coming up against it. I'll get us out of here breaking down some of these numbers here as quickly as we can for nat gas. Like we said, listeners, 640,000 contracts on the tape, 57% of that going up in the front D's contract. What is vol in nat gas right now? About 61 and a quarter off. About 2 and 2/3 points. So still looking pretty frothy, certainly compared to a lot of the other products we compare and analyze here on the show. Skew-wise, looking kind of interesting. Last week, the puts 3.1% cheap. This week, 5% cheap. So puts getting cheaper. Calls last week, 6% bid. This week, 10.7% bid. So calls getting juicier, puts getting cheaper. Again, maybe some nice collar setups. If you go a little bit farther out into some of these seasonally crazier portions of the nat gas curve, like February, you get a 15% bid to the calls and about a 10% discount to the puts. So, and the future out there trading around a 370. So, again, if you're looking for some nice collar setups, you could do worse around a 60-odd vol with a 15% bid to the calls and about a 10% discount to the puts, if that is your bag. In terms of action, it was the 3 puts lighting it up this week in December. 55,000 of those this week. The big day, Tuesday, just blowing the doors off on Tuesday. Nearly 27,000 going up on Tuesday, so pretty much half. 11,000 on Wednesday, 11,000 today, and 6,000 on Monday. Opening all week long on these 3 puts. So that's kind of interesting, especially given the fact that the puts are discounted and getting cheaper. So maybe a lot of overwriting going on that 3 put strike in December. Either way, a lot of paper, 55,000. Right behind it, we have the 2 3/4 puts going up 42,000 times again. The banger day on Tuesday, 20,000 on Tuesday, 12,000 on Wednesday, 6,000 today, and about 3,500 on Monday. Again, opening most of the week. So it is possible we have some vertical action, 3, 2 3/4, but it looks like it's more just size opening paper and just about every strike. If you're looking for calls, listeners, you got to go all the way down to the 4 calls in December. They traded 25,000 times this week. The big day for those, such as it was actually today, about 8,800 today, 6,300 on Tuesday, 5,200 on Monday, and about 5,000 on Wednesday. Closing on Monday, it's like opening throughout the rest of the week. Today's paper, we don't know, is about 22,000 contracts open on that strike right now. So there could be some folks taking those off. So 4 calls, again, we're at 3.5 right now in December. So 4 would have seemed outlandish just a little while ago. These days, not so much. Only half a buck. We could do that in a span of a few sessions these days in natgas, listeners. Unfortunately, that music means we have run out of time here on TWIFO this week. I want to thank everybody out there who listens live after the fact. If you have a request, a product, a complex you'd like to see make it onto the show, we always bump up the pros. But hey, everybody who writes in can get their turn as well. So if you have something you'd like us to talk about here on the show, hit us up. And Mr. Dan, if they want to hit you up, where should they go? What should they do, sir?
Well, I have a website, dangramza.com, and if you've never looked at futures before, one of the places to begin is just watch them, see how they move. And there's a free video. It covers 22 markets. I grab different markets at each session to talk about it, and you'll see red and green lines which represent buy and sell levels. These are not buy and sell recommendations, but I just want to give a feel for how these markets unfold and what the dollar value is of these changes. And you can go back 10 years and see, all right, what did he say when this happened, and what was nat gas doing when this happened? So it's a way to go back and see how these markets unfolded, see how these red and green lines changed, and maybe to get an idea that there's something else to trade besides those equity markets, that maybe it is nat gas or the currencies or some other complex. So those are some places you might want to check out to get additional information.
There you go. Check them out, dangramza.com. And you already know where to go to check out all the reports we have cooking over there, including the ones we didn't have time to get to on the show. It is only an hour show at the end of the day. Well, a little bit longer today, listeners. CMEgroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires. That's going to do it for us on the network today. Back again tomorrow. If you want more equity vol in your life, then you came to the right place. Volatility Views, noon Central tomorrow, if you can join us live after the fact on the podcast network for all of you on-demand folks. After that, of course, for all of our pro members, it's not just questions, it's also exclusive shows for you like Options Oddities coming up after Volatility Views tomorrow. Where do you go to get your questions bumped to the top of the list and get, of course, exclusive shows and giveaways? Congratulations to our pro member Wolfpack, won the Pro Trading Crate for October yesterday. A lot going on over there. 250 plus episodes waiting for you. The second you hit the button, only one place to go, listeners, theoptionsinsider.com/pro is the place to go to learn more. Then we're back again next week. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.